Yo, what's up, you guys? Welcome back to another weekly market breakdown. We will be taking a look at gold, the Dow Jones, NASDAQ, as well as dollar index from a technical and a fundamental perspective. Now, like any other week, it's important that we understand what news events we have coming through so we can kind of make a better trading decision when we do have to place an entry throughout the week there as well. So on Tuesday, we've got the core retail sales month over month. Then we've got the Empire State Manufacturing Index coming through on Tuesday also. And also got retail sales coming through. All of this is happening just after the US open, or the after the US market opens at 2 p.m. So just make sure that you are looking out for this news events if you do have a trade that you want to place at the same time. This is happening on Tuesday. Wednesday, we've got FOMC meeting minutes. This is normally where Powell comes out and then they kind of give us an update on the market, what the Feds are most likely to do. And the market normally reacts off speculation, or they normally react off what Powell said they might do. And that's about it. And then we've got unemployment claims. It's basically how many people has filed for unemployment benefits or benefit money. Also, if you are new here and you want to learn more about trading, I've got a whole playlist you can go through, basically located here in the educational content section. There is about 37 videos in there where you can learn. There's probably more that I haven't added yet, and then I've got 195 market breakdowns I've done so far. And guys, let's see if we can get this number to 10k by the end of this month, and I will give you guys a nice strategy that you can use to trade that I do utilize in the market there as well. Firstly, let's go over some of the questions that we got. Firstly, GPTV looks like Grand Theft Auto 6. I love your videos and would love to learn some more. You're more than happy to go through the content that I've just made, that I've just shown you now. Next up, we got Treza Mokoka is saying good stuff. Mr. Motang is saying this month we have to hit 10,000 subs. That will be the best birthday present for myself this month. It would be nice. Mr. Hussein, Telegram link, I've sent it to you. Ideal Elon Musk versus Zuckerberg. You think that will affect the NASDAQ? I think, even though it's a joke, I do think if Mark Zuckerberg works, we might see a jump in the Meta stock, and if Elon Musk wins, we could see a jump in the X stock as well. So that would be good to see there as well. But I think there's nothing threatening about that to the market. It's basically it's not like they're gonna eat each other bloodbaths or anything like that. But yeah, I think we'll probably see something in there as well. And that's about for the questions. Now, we've spoken about the US dollar. So I did say that now we've got a clear break on the dollar above this consolidation phase that I was making a reference to. We've had market stuck between this consolidation phase. I obviously had this clear break of structure, as we can see now. I do believe that we are going to trade higher as we go into the new week for the market to go and go and actually fill in all of this liquidity and go and create a new high, which is going to be this level of resistance that the market printed it as support, came back, printed an equal high as a resistance, and we can expect the market to print a new level of resistance. Potential pullback from there. We can definitely expect a continuation. If you do also zoom out, you'll notice that the market is trading on a what's known as a risk trend line. So if you just go slightly back, you'll notice that the market is trading on a risk trend line, and basically what this makes a reference to is that this is the trend line that the market had basically, or this is the trend that the market has been bouncing off the entire time. So I do believe once the market gives us that breakout to that side, then there's definitely room for the market to come and clear this level over here as well for the long term. But I know most of you don't like to trade long term. Most of you probably just want to you trade like most of us trade, most of you trade like the people who taught you how to trade in the first place. Next up, we've got gold. Bullish bias on the dollar index means we've got a bearish outlook on gold because they are negatively correlated. What negatively correlated means is that when the dollar increases in value, we expect precious metals to decrease. And when the dollar index decreases, we expect precious metals to increase in value. Then the reason for this is gold is priced in dollars, and you can see this numbers that you see here is basically $1,913 per ounce. Now gold is obviously set to continue lower, and this is exactly what we'll be looking out for. And how low? It's basically the same distance that we expect the index to drop. Now I do expect a massive liquidity wipe here. I do expect a nice liquidity wipe to the downside, and then from there we can definitely expect this price to continue lower. But for now, I do expect gold to continue lower. You go and hit that levels over there, and then definitely we are going to see these lows being visited sometime this year still also. Now the first thing we can obviously see over here is gold has broken below a very important structure. This level over here acted as a level of resistance. The market broke above resistance, came back, tested it as support, broke below support. The market never came back to test it as resistance, but this long liquidity wick came back to test that level. However, we can see gold is now printing an equal low over here. Now it's very important to keep in mind, as traders we have to be reactive and not predictive. We have to learn to adapt to the ever-changing markets. Now there's a good possibility that gold will continue lower, there's no doubt. Alternatively, if the market does go up, we can definitely expect this move to take place here as well. But as it stands now, I still see gold just melting this move to the downside. Also, next up we've got the Dow Jones. Dow Jones basically also very good price action over here. The one thing that we can see is the market had obviously started this consolidation phase to this side, but the market printed after it broke above this massive resistance that it had printed, never came back to test it as support. One thing we can see of this market is the market printed structure outside of the consolidation phase, which is basically this very important structural level that it had created here. Now this level over here acted as a level of resistance, support. The market then came back, started this consolidation phase, broke below that, came back, massive liquidity week, it's back there again. What is my bias on the Dow Jones? I do expect a correction. The market has got a lot of price that it needs to fill in here. So again, very important to wait. There is a good sell coming through for the Dow Jones, but I guess it's very important for us to just wait. Sorry about that. So there's two ways that I would personally approach the situation. I would then wait for the market to start printing, start sifting the bearish, to start showing some bearish price action, because at the moment we can see that was a green candle. I would go on to lower time frames, wait for the market momentum to shift from bullish to bearish, and then obviously apply the rules of the strategy that I use, that I will be sharing with you guys once we hit that 10k subs, and then I'll get into this market. Alternatively, the safest way to get into this sell position would wait for a clear break below this level of support, and then once support gets broken, it becomes resistance. The reason why it's important that you wait for clear breaks and closes, it's the reason why you want to wait for a market to basically close below this level, is that's a confirmation of the clear breaker structure. Now I can show you many examples, like for instance this one over here would serve as a great example of why you need to wait for candles to close below these levels before you get into it. If I go onto a 1 hour time frame, you will see many times the Dow Jones, while it was playing at this consolidation phase, the market dipped below these levels. Okay, now if you go on to even 15 minutes, you would have thought maybe that these levels were broken. You see, you can see the market dip below that, but these wicks, they basically closed back above the price, because you need to wait for the market to close. You need to wait. When I say wait, that means wait. Excuse me, that means you have to wait for them for this daily candle to close below the structure. If you want to be more careful, then you're more than happy to start looking for some selling opportunities in the market there, and then there. Excuse me, a break below this, a daily break and close below this will confirm the break of structure, and then we just need to wait for the market to give us a confirmation, to wait for the continuation to the downside. Next up, we've got the NASDAQ. Now the NASDAQ 100 basically over here had broken below the structure that held it, that was busy holding it into life. So the NASDAQ obviously had broken below resistance, tested it as support, broke below support. Green candle we have there served as a test of resistance. The market broke below that. We've got an equal low over here. I do expect a further move to the downside, maybe potentially here to this level to print a new equal low. Also, but we have to keep in mind that we do have a structure, that we got to break a structure over here. This level of support got broken, so it would be good for us to see a slight pullback. Maybe we go into next week, get a pullback, and then that continuation to the downside there as well. That is it from my side. If you enjoyed the video, please smash that like button for the YouTube algorithm. That's all from my side. Thank you for your time, and as always, have a good week. Cheers for your ears.